MMTs, this is going to be the standard model that the hedge fund manager community, remember how we had called the shorts back over in here during our last reporting era? A double week down, a nice slide to bid. You had a 5 narrow range weak bottom, which we traded up and down every day. Here, as you can see on the weekly Amazon.com preview, is that you've got a weekly topping pattern right across those ridges. And this is what standard people are going to look at, hedge fund managers, mutual fund managers, more importantly, different various tier level institutional traders. And they're all going to be making decisions ahead of the earnings. And we're in the middle of an FOMC meeting with Bernanke making a big announcement, and they're talking about everything today. QE2, ever heard of that? Not to mention many other things around the corner. Thing of it is what are you going to do with the risk management? We are ready to trade this. What I want to point out to everyone right here is that Amazon, outside of the earnings now, it's not extremely overbought. It's only 67.57%. It's not at 85% DS. That's what those people are going to look at and make decisions. Why? Because we know how the public model works. So we're examining their thinking. This is what they use. Your MMT market maker platform, though, does all the work for you, naturally so. And why is that? It does all of the adding up and subtracting for you. So after hours, what we're going to look at is how we get long on the upside. I'm going to give out limit orders after hours, and I'm going to give limit orders out to sell short at 192.75 up and out of the money, day plus. To go long, I'm going to have orders being put out there right around the 167.50 handle on the downside spike. So right when they release that report, bam! There goes that big public reaction. A big bomb goes off between the buyers and the sellers and all the gimmicks and all the tricks that happen in after hours that naturally the public model and those people don't know, and how to square in and out of positions for the following morning in pre-market to buy and to sell and to trade off of the report. So on a great knee-jerk reaction, we're going to have up and out of the money to sell short, and we'll have below the market to go long on any earnings preliminary knee-jerk reaction. Now, as far as the BWLD goes, Buffalo Wild Wings, here, this one's at 91.67% overbought. Yes, they can come in with a good report, but what's forward looking? Yes, they can get a little bit more overbought, but the upside is up here toward the top. So we're going to examine the calls and the puts on Buffalo Wild Wings as well. See Amazon's not 91.71% DS overbought. 144 on the CCI. Okay, now this is all standard technical analysis, MMTs. That's not how you make decisions, but rather you understand the public model, their thinking, the public model, behavior, transactions, okay, and why your platform deciphers all of those transactions even before they're even made, right to the penny, okay? So Buffalo Wild Wings is a little bit in the short term extended. It could pop up a little bit. We could take a small position in the put side below the market. Say we start looking at the $55 put. We'll see what the pricing is on the $55 put, MMTs. And we could take a look that CMG had a little problems in the earnings. Panera Bread is down today. High oil could be taking effect. Forward-looking guidances, things that could show up. If there's a squeeze on profit margins, stock could drop. It never really drops that big, MMTs and after hours. I mean, a $5 drop would be pretty good for them. Sometimes 7.5. It just depends. We're in a bull cycle right now, so we're not in the bear cycle. So the bull cycle drop downs can be more shallower in this kind of name in Buffalo Wild Wings. Taking a look at the $55 put.